Today I'll be calling cable. My name is Wakar Meyer and I'm your Elliott Wave analyst, reviewing what has been and predicting what is likely to be in cable price action. So we're looking at a daily chart, okay? Just recapping real quick. I think since 2009, the pound dollar has been in a triangle pattern. And I think where we are in that pattern is the E wave, E like Edward. And the A portion of that E wave has finished. 1, 2, 3, 4, 5 to finish A. And hopefully you can see it visually. The first wave is the longest wave. There you go. It's kind of rough, but you can see that it's 3 is definitely shorter than 1 and 5 is shorter than 3. So now we must be in the B wave, and I'm going to go from this daily chart to a 54-minute chart, and I counted what I believe are 5 waves down to this point right here to make A of the B wave of this E wave, if you're following along with that. So we had a 3-wave correction, 1, 2, 3, that made A. We had another 3-wave correction, A, B, C, that made B, okay? And now we got 5 waves up that finished on Friday, right? 1, 2, 3, 4, 5. Here's your internal 5. 1, 2, 3, 4, 5. That's the 3rd wave. And it retraced a little deeper than I thought it would, but there's nothing that says it can't do that. I just expected it to fill the gap. That, as you can see, it was about a 90% retrace. But as you can also see, I drew a trend line connecting the origin of 1 and the terminus of 2, and this wave is now breaking that trend line. So that's kind of a good first indicator that that wave may be over and that now we should see a fall. One other thing I think to note, and maybe I'll go back to the daily chart, it might be clearer. Yeah, it's not so clear there. I'll go to the 54-minute. But as you can see, if you look at the MACD, okay, there's that peak. And if you look at the MACD, and I'll put a trend line on here, you can see that this move up is clearly higher than the peak for the terminus of A. And what that does is it gives us a divergence. So if I put a trend line like that for our indicator, oops, wrong drawing tool, and I put a trend line like this for price, you can see one slants down slightly, one slants up slightly, price down, the indicator up, and that's a convergence, and it would indicate that there should be a move in the opposite direction, and that correlates with and corroborates the idea that this entire move is corrective and that we should get a down move now. So what should be happening here is, and let me contract this a little bit, this yellow line right here is the terminus of the first wave, okay? Going back to the daily, that would be right here, okay? So I believe that price is going to come down to about at least 1.5716 to the daily. So price is going to come down to this point, probably closer to the terminus of 2, down at 154.85. All right, and if I put a fib on that so we can see how the C relative to A stacks up, you can see that if it does indeed reach that level, that'll be more than a 200% C to A ratio, with 161 being right here on the monthly Fibonacci support and resistance. One other thing to note is that price action indicated in the short direction for the monthly Fibonacci. Now these Fibonacci support and resistance are good for the entire month of October. They're based on the month of September's price action. And usually when it indicates in a direction for a time scale, it's going to move in that direction. Now on the weekly time scale, it indicated in the up direction and it moved through all the up resistance points. So now I expect it to move down through probably all of the support lines, but at least down to the 1.5716. Let's see, going back to the 54-minute chart. So once again, I would expect it to come down to that level, and that relationship is about 138 with 161 being down there. So I would say 1.56 is probable. I'm trading this in the short direction. My out would of course be as price makes a new high past, what is that point there? 1.6259.4. So if price were to pass 9.4, I would take my loss, but I expect it to come down closer to 156, and that's probably where I'm going to take my profit. So that trade is currently down because I entered as price action, and I know better than this. I shouldn't have done it. I should have waited for price to break the trend line like it's doing right here. I should have waited for that. I would have gotten much a better entry, but I set it up to enter as price filled the gap at about 1.6130, and we'll see what happens. But I still believe that the pound is going to retrace short, and then that we're going to get one more push in the long direction. That's today's call. I hope you'll join me again for tomorrow's call.